about the agenda for this webinar that we have today. We have an industry expert who will be with us at about 5 p.m. and he will just take us through what are the requirements and what is the role of the capital markets and this course. Before that, we have a session where we will take you through the entire curriculum as well as the coverage that we will be undertaking in this course. And after that, we will also help you with the LMS, that is the Learning Management System, and how you can use this tool. In case any of you all have any queries, please feel free to ask us on the chat, or you can even ask us these questions via the audio. Sandesh, can you hear me? If you can, please confirm.
Yes. Yeah, I can hear you.
Sandesh, for the benefit of the class, please could you introduce yourself very briefly?
Yeah, my name is Sandesh Singh. I have completed my engineering in biomedical and I am working with G Healthcare from past 2 years.
Okay. Now, in addition to Sandesh, we also have with us Siddharthan, but I believe he's on his way out of Chennai and he's in the car. So we will not be able to get an input of the audio from him. But I'll ask him to send us a very quick introduction via chat. The details of the certification program. little bit.
Hello everyone. So nice to be here and interacting with you on this program which is a certification in capital markets. What I'm going to do is take you through the program in terms of what gets covered, the syllabus, and we'll probably also do a little bit of a deep dive into within those topics. What is the scope really of each of these topics and how does that kind of help you? So I'm going to quickly start off with giving you a first-hand view of the entire 8-week schedule, which is right in front of you now. So just quickly, and we'll talk about each of these areas as we go along, but just quickly, we will start off with financial systems and then move on to cash equities. So basically what we have in the first 3 weeks are financial products, the securities market basically, largely focusing on the capital market. And the week 3 onwards, we also bring in commodities, forex, and then start to introduce derivatives to you. Week 4, week 5, and so on is again various different types of derivatives, that is options and swaps, and I'll spend some more time as we go along. Week 6, 7 is about risk and compliance. So it's not just about the product as such, but the risk attached with it, the regulations that govern these products, these markets, the trades, and the week 7 is the operations part of it. This is basically the process behind, or rather to say how they are traded or how they are settled and so on. Week 8 is about the entire evaluation, so that's like a culmination of the entire program. So now I'm going to go into details of each of these weeks, and let's start off with the financial system. Now, the purpose of doing financial system at the beginning is to give you a 40,000 feet view of the entire landscape. Now, we generally, talk about finance, and finance domain as such is very huge. So what falls into this financial landscape, it's important to understand that. Now, finance could be, the asset management, or could be the investment banking side of it. So here in this particular session, we will talk about the 2 basic things about people who have money and want to invest. And on the other side, there are people who need money and would want to borrow or take a loan or want money in some other way. So if you look at the entire financial landscape, it will always, at the base of it, will be either people who have money and want to invest, and people who need money and would want to borrow or whatever. So this could, and when I say people, it doesn't mean individuals as such. This can be, governments, this could be companies, this could be financial institutions, and so on. So let's take an example. I mean, if I just say that, look at the banking business as such. The banking business, and in the most simplest of way to understand, is that it's an institution which is accepting deposits from someone, and then also on the other side giving away as a loan. So if you look at the banking business, it is basically bringing 2 people together. One who has the money. So the person who has the money goes to a bank and takes out an FD. And on the other side, the bank also brings in the person who wants money. So there is somebody on the other side who probably needs a personal loan or any other type of loan, but basically in need of money. So a bank is actually an intermediary which brings these two people together. So hence we have understood in terms of, in the most simple manner, how do you get somebody who has the money to meet somebody who needs the money. Now this was at the individual level. If I just kind of take it to the next level and say corporates. So corporates will also have a need for money. At the same time, some corporates, given their business model, they will have some excess cash, which they would want to invest. So as you can see, a corporate can also have money, at the same time need money. Another example that I can give probably at this stage is, let us say an insurance company or a mutual fund. A mutual fund is nothing but people who have money kind of pool it, create a common pool of resource, and then give it to a fund manager who, on behalf of the investors, will invest. So this is an example of somebody who needs them, who has the money and would want somebody as a professional to invest on their behalf. On the other hand, there is a company, let us say, you can take the e-commerce example today, let's say Flipkart, or let's say Facebook, or Alibaba for that matter. So these companies, given their expansion plans and given their business models, want to raise money. And here I would not use the word money, but use the word capital. Because for two reasons. One, the amount or the requirement is very huge. And secondly, it's for a very, very longer term. You can either take money from somebody for a short period, or it can be a long-term requirement. So there you see, on one side you had asset management, where by pooling these money, the amount is a huge amount. And on the other side, you have a company who would want to raise capital, and again a huge amount. So if you can get the mutual funds to invest into these companies, then that's also the entire financial landscape clearly explains, that people who have money versus people who need money. So in this session, what we do is to have a 40,000 feet view on the financial system as such. Now when it comes to people who need money or have money, on how do you really take money from somebody? So suppose if I were to say that I want to raise capital. I'm a company who is probably, a Flipkart or an existing company, let's say a Reliance Industries or State Bank of India, and they want to raise additional capital. So the two ways of raising capital could be either debt or equity. I can either ask for money with the idea to return it back after a particular stipulated period. So that's a loan, that's a debt. Or I can ask for money and say, why don't we share the profits and losses? Which means basically asking somebody to invest money and making that person a partner in the organization. So that's equity. So when I say how do I raise capital, there can be two ways of doing it. One is debt and the other one is equity. Now, the debt part of it again, whether the money is being raised for a short term or for a long term, that will decide whether it's a debt market or a money market, which is what we have put that in week 2 as the session on fixed income and money market. Now let's just go back to equities for a moment. In equities, here we start off with obviously the ordinary shares, which most of you would have understood if you've done your graduation, then learned the Companies Act. So you have an ordinary share as defined by the Companies Act 1956. So not just the ordinary shares, but we will also focus on some of the other products like an ADR or a GDR. Companies who want to raise capital from overseas markets cannot directly do so, A. Also, the citizens of, let's say, America or Europe cannot directly buy shares. So the route that is taken is the ADRs or the GDRs, which is American Depository Receipts and Global Depository Receipts. So we will cover that as well in the sessions, in the equity session. Focusing not just on the concept or the product as such, but the larger focus will be on the how part of it, as in how are equities traded. So here is where we bring in the stock markets, the financial markets, where we will talk about how does an equity get traded on a stock market. So we'll take an example of a typical stock market or stock exchange and then take you through in terms of how an order can be placed, what are the different ways of trading that is done, and then also spend some time on the clearing and settlement of trades, which means that if the order was placed and the order got executed as a trade, what will be the post-trading activity in terms of the clearing and settlement of the trade. So here is where I think you will get a very good view of the end-to-end trade life cycle. And finally, within that session is of course indices, the very popular Sensex or the Nifty, or take the example of the global indices like Dow Jones or an FTSE. So here is where we will bring in the understanding in terms of how do you calculate the indices, how are these constructed, what are the various ways of revamping indices and so on. So that's basically the equities session. Then moving on to fixed income and money markets. Fixed income, very simply speaking, is nothing but a debt security, and a debt is nothing but a loan. So if I say that a debt instrument is basically an interest-bearing security. Now, let me give you an example here. If I were to borrow, let's say, 10,000 rupees from you, I obviously have to return it back to you after a pre-decided time. And of course, I will have to give you some interest on that. So it's an interest-bearing security. And in this particular session, we will understand the entire fixed income landscape. What are the various products that get traded? What is mentioned here in terms of types of bonds. The point to be noted here is that when you're using the word bond, it necessarily means long term. So the session here will primarily focus on instruments which are long term in nature. Nothing but a loan, but the years for which the loan is taken is 5 plus 7, 10, going up to even 30 years. So we'll focus on the various types of bonds. And again then, not just focusing on the concept and the product, but looking at the trading aspect of it. So here again, we'll talk about how are really bonds traded. Now this is slightly different from equities, not very popular, with the retail population as such. But this is a very big market, and largely the institutional players, trade in bonds. While there is a retail debt segment also in India, but I don't see much of volumes happening really there. So we talk about the trading aspects of it, and when I talk about trading a bond, we must also understand that the interest is anyway fixed. So obviously the pricing of the bond, or how much will somebody pay on that bond, will also have bearing on a lot of other factors. And so that's where we will, talk about bond pricing and yields. Let me just spend 2 minutes on yields as well. If I say that I have a $100 security and the interest on that, let's say, is 5%, which means $5 is the income as such on that particular bond. Now, if let us say the interest rate generally prevalent in the market is, let's say, 4%, which means that this particular bond gives me 5%, whereas any other security gives me 4%. So clearly this will be very popular and will be in demand. Obviously, if this needs to be traded, then it will command a premium because it's giving 1% extra than the other instrument. So it will get traded more than 100. And so that's where your bond pricing will come in terms of what should be the price at which this bond should get traded, taking into consideration all these factors. And if the trading is taking place, let's say, for example, at 105, then obviously the interest will have to be calculated on 100, which means you're making still $5, but you paid 105 for it. So as a percentage, you did not make 5%, but something lesser than that. That's your yield. I don't want to get into too much of details. I'm just trying to, give you an overview of this. But just because we're talking about those concepts, hence I thought it's important to kind of give you a very brief understanding of this. So we focus on the pricing aspect of it, and finally the MBS and the ABS. MBS stands for mortgage-backed securities, and ABS stands for asset-backed securities. MBSs and ABSs, as the word is suggesting itself, mortgage-backed securities, which means there is a security which is issued on the back of some mortgages. Mortgages are typically your home loans as such, your housing loans, or loans taken on the back of some land to procure some land and so on. So mortgage-backed securities are securities that are issued on the back of the mortgages that are issued. ABS is asset-backed. So anything which is any other asset, let's say plant and machinery, furniture, fixtures, any other asset, if there is a security which is issued on the back of it to generate more finance against that, then those will be MBS and ABS. So that's what gets covered in the fixed income session. Moving on to money markets. Now, money markets is the shorter version of the same security. So these are also debt, but of course I shouldn't be using the word debt here because they are short-term in nature. So any particular short-term requirement of funds, and when I say short-term, it could be as less as 1 day and going up to, let's say, 1 year, would come under the bracket of money market. So in this particular session, we do a lot of instruments which are under the money market space, like a call money or a treasury bill or repos and so on. And as we've been doing it in all the session, we not just focus on the concept, but also do the process part of it. So how will a primary market issuance will be done is covered in this session. I'll move on. Should you have any questions, you can feel free to put it on a chat message or something. Please feel free. I hope I'm not being too fast. I'll move on to the next slide, which is the week 3, week 4, and week 5. So week 3 is now getting on to commodity markets. I think there seems to be some typo there. We've got the syllabus wrong there. But basically, we'll talk about commodities. So, probably some of you would have heard about it, that there are, let's say, gold and silver traded. These are, precious metals as they are categorized, or popularly called as bullion as well. Then there could be some agricultural products like say rice, wheat, soybean and so on. Then there can be crude or energy. So commodities is also a very big market. We will in this particular session talk about what are commodity markets, what are the various categories within which I told you about precious metals, I told you about agri products, I told you about energy. What would be also interesting in this session would be in terms of how they are traded and how they are settled. So here we take examples of not just our local markets, which is the MCX or the NCDEX, but also look at the global markets, let's say the London Metal Exchange or the Chicago Mercantile Exchange. So we'll bring in the commodities market in terms of how the commodities are traded, how they are settled, what is physical settlement, what is cash settlement, and so on and so on. Moving on to derivatives. Now, I'm sure derivatives is one term which you would have come across in your academics, probably learned a little bit more on that, or some of you probably would have taken some certifications around derivatives and so on. Here we will start off with basically the financial derivatives, which is forwards, futures, and so on. Not just the definition. We all know the definition that the value derived from the underlying and so on. But I think the definition doesn't really explain in terms of the lovely product that it is. So we would want to start off with the overview of the derivatives market and then move on to the products, the financial derivatives like forwards and futures. In a future or a forward, and as the word is suggesting, you trade, but you actually settle in future, which means that what is the guarantee that the trade will be settled? So to ensure that the risk is minimized, you take some margin from both the parties. And that's your concept of margins, which is very, very important in terms of, in the case of derivatives market. So we will spend some time understanding the margins. And then of course, how the futures trades are settled, how are they priced, and we will also try and bring about simulation in terms of the entire trade life cycle being depicted by way of a trade flow. Currency markets, very, very interesting. I think all of us would have, heard about rupee going to 64 or rupee going down to 60 and so on and so on. So what is really this market where you exchange one currency for the other? And that's what the focus is going to be when we do the currency markets. So the rupee dollar or euro USD. Interestingly, the currency market is a very, very high volume market. In fact, it's about 4 trillion plus per day. That's the kind of trading that happens in the forex market. So I'm sure it's going to be a very, very interesting session understanding the forex markets. We go one level deeper into derivatives and bring in options. So options is one of the very interesting products in terms of you do not really trade, but you actually buy a right to trade that particular security. So I don't want to get into the complexities of it or not confuse you at this particular point, but we have an entire week kind of dedicated to the options. And alongside that, we will also be doing collateral management. Now let's take a small example for a couple of minutes to understand collateral management. Now, if let us say I want to trade in the derivatives market, I actually cannot, I don't have to pay the entire amount, but a small amount just to kind of get the trading going. So let's say I do a trade of let's say 100,000, and I give let's say 20,000 rupees as margin. That's like a security deposit. Margins in the most simplest of way to understand are nothing but like a security deposit. Now let's say if I have traded for 100,000 rupees and I've kept 20,000 rupees as margin, what if the value of that 100,000 goes down? The markets will change, the price at which I buy can go down, which means the value of that 100,000 becomes 90,000 the next day. So against my 20,000, the 10,000 is already kind of adjusted, for a lack of a better word, towards this loss. Which means that my margin is not really sufficient. So in order to replenish that, I will need to give another 10,000. So this day-to-day management of this margin is nothing but collateral management. The collateral, when we use the word collateral, we are actually referring to a non-cash security deposit. So instead of keeping cash, I may choose to keep another security. I may want to buy 100,000 rupees worth of, let's say, TCS, but to keep as a security deposit, I may want to keep 20,000 worth of, let's say, ITC shares. So, the collateral management is the day-to-day management of the collaterals that are kept against the trades that are being done. We'll spend some time understanding collateral management, how is it done, what are the nuances thereof, what are the exchange rules against that, what are the various types of margins, and so on. Moving on to options again, we will also not just focus on the options as a product, but the strategies as well. So options, calls, puts, combinations thereof are nothing but strategies. So this will be an advanced level topic that will get covered. Warrants, again, more or less like options, because warrants actually give you the right to convert certain securities into, let's say, equity or so on. So we will also take that warrants as one of the products. And then, so until the week 4, this is financial derivatives. And the week 5 is going to be another type of derivative, which is credit derivatives. So here we bring in the products which are popularly called as the swaps. And within the swaps, we will now focus. So we've been focusing on, let's say, equities or options and the futures forward thereof. Now we move on to a different asset class, let's say interest rates or credit default swaps. So in these, in this particular week, we will introduce to you the various complex products like a credit default swap or an equity swap or a total return swap. Now I know this probably does not really give you an idea in terms of what is an equity swap or what is a total return swap. But of course that's something that's going to come up, so I'm not going to spend more time on that. But basically, as a swap generally means an exchange. So it's like if I give you an amount and in return you probably give me the performance of an equity, then that will become an equity swap. Or an interest rate swap, in the most simplest of meaning, will mean that I have a fixed interest rate liability, you have a floating rate liability, and why don't we swap the liabilities in terms of fixed versus floating? So interest rates are swapped. So that is what we will cover in the derivatives session. Any questions? Yeah, nothing so far, but please do feel free to write in. I'm happy to take on any questions at this stage. Not yet? Alright, so I'll move on, but in case you have a question, please do let me know. Week 6 is going to be risk and compliance. Now risk, being in financial markets, risk is something that will go hand in hand with every product and every trade. And to manage risk is a science, for that matter. So there are various techniques to manage risk, and which is what we will cover in the session in week 6. Risk is something that cannot be completely eliminated, but how is it that you can mitigate that is something that will be the focus. And again, there are various types of risk. Suppose if I borrow 10,000 rupees from someone and I don't return it back, then clearly there is a default risk. If I buy equity shares at the price of 100 and tomorrow the price goes to 95, there is a market. So there are various types of risk, and in these sessions we will focus on the various types and understand them, and most importantly, how do you manage those risks? So that's going to be the focus around these sessions. The next part within the same week is regulations. Regulations is important. There are regulatory authorities who monitor the conduct of business, the way the business is done, so as to ensure that the business is in the best of the interest to all the parties, most importantly the investors. So there are regulatory frameworks given in terms of how trading should be done, how the settlement should be done, how what are the safeguards that businesses need to have. So this session will focus on the various regulations and the compliances that need to be in place for every business. So that's got 3 parts to it. We will do that in week 6. Not just covering regulations, but some of the acts, let's say the Securities Contract Regulation Act, or let's say the CIBOP, or let's say the Dodd-Frank Act, and so on. Finally, in week 7, we will focus on the end-to-end trade life cycle. So this is going to be the most interesting week, because it actually takes you right from the start of the trade till the final accounting and reconciliation that takes place. So this is basically the front to back of the entire trade life cycle as such. Here the focus will be to do not just one product, but do multiple products. Also do a classification in terms of how will a trade life cycle look like if the trade is done on an exchange, and how will the trade life cycle look like if it's an OTC. OTC means over the counter. So anything which is not done on the exchange, but outside the exchange, where a buyer-seller straight away meet and negotiate and trade, is an OTC trade as such. OTC market is a bigger market. It's bigger than the stock exchanges as well. So in no way we should think that OTC is probably a smaller market. It's an unorganized with a lot of focus now on getting it organized, but it's a very, very huge market. And the final bit is the functional linkages. Now, functional linkages basically means that there are various functions within a particular organization. there is operations, there is technology, there is audit, there is legal and compliance, there is risk and control, very important, risk and control team. Then there is product control team. So what is the link between these two? How are they interrelated? How is it that the work or the role of one function affects the other? So that's something that can be a very, very interesting topic, and this is what we will be covering. So we look at the various functions within the financial markets or the capital markets and the intermediaries, and try and bring about a link between these to say that how do they individually perform and how do they perform as a group. So how do they link with each other? So that's really the 7 weeks, and given the kind of videos that are available, I'm sure it's going to be a very, very interesting learning experience. And you have also those touch points at the end of the week where there will be a webinar. So clearly a great opportunity to interact with the trainers and the experts. I'm sure there will be industry experts who will come down and interact with you. The week 8 is going to be the culmination of this particular program, wherein you will have your project presentation. Now, the focus of this particular training or program is not just conceptual understanding thereof, but also the application part of it. So what we will do is to give you a project and get you to work on that so that we have an objective assessment of how has been the training, have we really achieved the objective of the knowledge transfer that we had envisaged, have we really understood and put into practice what we've learned over the 7 weeks. So this is the culmination, and that culminates into obviously the certification, which is the industry endorsed CCM certificate that you get, and of course the CISI certification should you wish to take that. So any questions so far on the breakup of or the syllabus that gets covered over the 8 weeks? None as yet. Alright. So I'm going to move on to the next slide. So this is basically talking about the industry connect. I think what is important is to have a very relevant set of people interacting with you when it comes to this course, just understanding it conceptually, but also understanding the relevance thereof and getting the practical understanding alongside the theoretical understanding that you will get. So what we will be doing is we're going to get some people from the industry who will come down as guest lecturers, who are subject matter experts, who are extremely good in their own businesses. They are experts. They spent 15-20 years in their domain. So they will come and interact with you, probably take up a particular topic and share their knowledge around it, or the industry trends around it. And obviously, at the end of it, we'll have your question and answers. And should you have any questions, you can ask them and so on. So this is basically the industry connect. So the idea is not just to keep this course as a typical course with just concepts around it, but bring in relevance, bring in the right kind of people to interact with you, and see to it that you really gain from that. So this was about the entire course, the overview thereof. I'm happy to take any questions if you have any. So what I'm going to do is I'm going to log off here, and I'm going to hand over the mic to Joy. Yeah, Joy, you want to take it over, please?
Thank you, Harish, for that very, very informative session. Now we would like to go on to a very quick introduction of our learning management system. For that, we've got Zenobia with us. Zenobia leads the content development for the CCM program. She has over 12 years of experience working on e-learning projects across various domains and delivery mediums, be it online, classroom, or hybrid models. She also manages our LMS system, for which she will be doing a very quick demo for you right now.
Participant?
Hello? Okay, so I'll just go over the learning management system or the learning portal that we have at Imarticus. So before I begin, this is the home page that you all will see, and I believe all of you all have already received your user IDs and passwords. In case you haven't, please just get back to Joy or just leave it in the chat message that you have not received your login ID and password. The learning portal that we have is an internet-based or a cloud-based portal where we will put up all of your learning material and we will manage your learning on the portal itself. So in other words, this is like your one central place where we'll manage your learning. All your study materials get put up on the portal. All your grades get published on the portal. You can talk to us on the portal and we can talk to you on the portal. So in other words, you don't need any kind of Gmail groups. You don't need any kind of emails that take you out of this portal. We can achieve all of that using this portal itself. You can also chat with each other live using the portal. You can share files with each other. You can collaborate with each other on the portal. So the way the portal will work is you have to have internet connection firstly, and you will have to open Imarticus at imarticus.loudcloudsystems.com. Once you are logged in, you will see this page that I shared on my screen. I am going to log in as a dummy student, so you will know what you are going to expect as well. And in case you forget your password, there is a forget password link over here which will take you to the forget password activation link. In case it still doesn't work, please just get back to Joy or any of your VD guys like Dharmesh or Arvind, and we will give you your password manually. So once you have entered your username and password, you will sign in. As I said, this is an internet-based portal or a website, and so you will need reasonable amount of bandwidth, otherwise your experience will be less than optimal. You will also need a reasonably updated Flash player. So once you log in, this is your home page that you will see. The first time that you log in, this page is actually going to be completely blank or gray in color. You will have to click this dashboard widget, the thing that I'm pointing at. And from here, you'll just have to select all of these items over here. This is just for the first time that you log in. After that, you don't need to do that. And as soon as you've checked on all of these items, you will see your course, CCAM 01 Mumbai. Can you see this over here? So you will click on this particular class or this link and it will be taken to your particular class. So as soon as you are into your particular class, on the top of your screen you will see your own username over here in the area that I'm pointing at next to the photo. You will see your class name over here next to it. And when you click on your own username, you will get the option to reset your password. So there's a change password link over here which you can change the default password that we have provided you. This is just for security reasons. Then on your dashboard over here, you will see a calendar which will tell you what is expected or what is due from your side and when do you need to complete it by. For instance, in this case, it is telling me that an assignment for fixed income starts on 8th of June. You can start reviewing the Module 1 topic 2 PPT. There's an assignment and a quiz that you can start solving. So this is basically like a dashboard that gives you an overview of all the stuff that we are putting up on the learning portal itself. You can just click this link and it will take you to that particular file for you to either read or attempt. Then on the bottom half of your dashboard, you will see announcements from our side to you. Announcements are just one-way communication from Imarticus. It could be from me, it could be from Joy, it could be from any of us, telling you that something, informing you of some kind of announcement. For instance, here you see an announcement saying, welcome to the program. And periodically we'll be updating this area. So all of our communications will be happening on the learning portal itself in the form of announcements. So please do check this particular area, the one that is currently on your screen, in the announcement section. All of your actual study material is going to be Hey, where did that go? That window just shut down. No, that window that I was just showing, the LMS one, that's just gone. What happened? Okay. So all of your study material in terms of your webinar content, all of your videos, all of your assignments and quizzes, you can also access them from clicking course and course material. So all of your topics that are going to get covered in CCAM are organized by modules, and within each module, you will see videos, webinars, assessments, additional reading, and PowerPoint presentations. We will start uploading material for each of these modules in the coming weeks. For instance, in case of financial systems, we will upload the video by Monday or Tuesday. We will upload the quizzes by Wednesday, and you're supposed to solve it and submit them by Friday. We will upload the PowerPoint presentations on Monday itself, if not today. Some additional reading is already uploaded, which you can go through at your convenience. Assessments for your batch are going to be mostly quizzes. They could also be case studies or assignments. So as of now, most of this is empty except for the additional reading folder. Then you also have an additional reading folder outside all of these 9 modules. These are general videos that we have uploaded. If you have the time, you can go through them. We also have some banking videos or investment banking videos. These are again not the main curriculum videos, but just general videos that we have found online. And the way the videos will work is you just click on these links. All of the items that you see on the learning portal are all hyperlinks. So you just click on them and it will take you to the relevant page. So this is just a sample video that we have uploaded. All of your videos, all of the main curriculum videos for this batch will be uploaded in a similar format. They are not going to be made downloadable. You will have to log into the portal and view them online.
Hello. Today we will be talking about option strategies.
So you can pause,
Before
play,
we do that,
rewind,
let's try and
all of that
what are options?
on the portal itself.
Rather than getting into the definition, let's take a think.
You can also put comments on each of these videos in the bottom section of the page. That is, for instance, you can say from 1 minute to 3 minutes, I have not understood XYZ. An instructor will get back to you on your questions, so you can post it in this particular area itself. Then I will also take you through how do you solve a quiz and how do you solve an assignment, because that is going to become due for you next Wednesday or next Thursday. So there is a folder called tester under which we have uploaded 2 sample dummy quizzes and assignments. You will click on them. So all of your quizzes will look something like this. It will tell you what is the due date, what are the maximum points you can get in each of these quizzes, what is the duration or the time that is expected from you to complete the quiz, how many questions are there, and whether it is graded or not graded. Now, before you actually attempt this quiz, please make sure you actually have the time that is specified over here, because you need to complete this in one single attempt. You cannot close the window and then resume the quiz at a later point. You will have to complete it in one single sitting itself. Also, there is an instruction mentioned over here, which you can say is a bug. It is that do not refresh your screen, because as soon as you hit refresh, it will count it as a submission. It will count it as if you actually attempted the quiz. The other thing to remember with quizzes or assignments is please do not click the close button on the window, because that again will get counted as a submission. Submission meaning it will think as if you have actually clicked the submit button on that quiz. When you actually have the time, that is in this case when you actually have 20 minutes to solve this quiz, only then click the attempt quiz button. So your quiz window will look something like this. All of the quizzes are just going to be MCQ or multiple choice questions. The question is on the left-hand panel and a scoreboard kind of thing is there on the right-hand side. It is telling you how many questions are there, how many you have answered or unanswered, and the clock has started ticking. As soon as you click the attempt quiz button, your clock will start ticking down. And the way the quiz will work is you just click on any of your options and you click on this button over here, which is save and next. Again, the same thing, save and next. So as you can see, this bar over here will start filling up in blue as you have saved and completed one question. And before you submit, you can review your entire selections by clicking on this panel over here. But please note that please don't use this panel over here to make your selection. You will have to click on save and next. Only then your selection actually will get saved and counted towards your final score. Once you are through with all of them, you will have to check that this panel over here which is numbered fills up completely in blue. And once you're ready to submit, click on submit quiz button, which is on the bottom right corner of your screen. It will once again prompt you that you have some unanswered questions do you want to submit. You can either say no and submit them again, or you click on yes. So you will immediately get your grades. In this case, I have got only 1 out of 12 correct. Please note all of the quizzes and assignments are going to be one attempt only. It's not a best of multiple attempts. You will have to complete it in one attempt only. Now, and now I'll show you an assignment, which is this one. So most of our assignments, the instructions are going to be given inside a Word doc or an Excel file. You will download this particular file by clicking the link. When you're ready to submit the assignment, we recommend that you solve the assignment completely offline. You don't do it on the portal itself, even though there is a provision to do it. Just download the file, solve the file, come back on the portal and upload it. When you're ready to upload it, click on New Attempt. Give a name for the file. Now here you can either create the document completely from scratch on the portal itself, or you can upload the file back over here. You select the file and then click on save. But please note, this is just sitting in as a draft. It does not go back to the instructors. You still have to click on submit attempt. The button is over here, the area I'm pointing in. Click on yes when you're ready to submit. And this is what an assignment that has been properly submitted will look like. All of the buttons disappear. The buttons disappear because there is only one attempt and you've already submitted that one attempt. Next, we come to the class wall and the class forum. These are areas where we can speak to each other, we can share files with each other, and we can post queries, we can post links, we can share information with each other. The difference between the two is one that we have drawn up. The class wall is something that is open to everyone in your class. So your instructors, all of the students, everyone will see what you post on the class wall. Whereas the class forum is more private, it's between two people only. Two people could be any two people, it could be an instructor and a student and a student, or an instructor to another instructor. Under connect and class wall, you can post a comment over here, but please note this is again open to everyone. Everyone will get a ping saying something new has been posted on the class wall. If you want to keep something private or if you think it does not really impact others in the class, please just put it on the class forum. So if you want to reply to an existing thread, you will just click on this reply button over here. Whereas if you want to start a new topic, you will click the post a comment button, which is on the top right of your screen. Next, we'll just look at the class forum. Class forum, there is an individual forum, a questions to instructor forum, and a discussion question forum. All of these essentially are between two parties only. The question to instructor forum is if you actually have a domain related question for the instructor. Which means, let's say you've gone through the videos or you've done a quiz at home and you still have some doubts that you want to ask the instructor. Obviously, you have the webinar on Saturday, but if you don't want to wait that long, you can just post it on the forum itself and either Joy or any of the instructors will get back to you within 24 hours of you asking a question. So right now, most of the things that you see on the portal for your class are empty because obviously this batch has just started. You will click on new topic if you want to start ask a question to the instructor. You'll put your query over here. You can also attach files over here. And you can share these with the instructors or you can share it with the other students in the class. And submit. Similarly, the individual forum works exactly the same way except it is between any two parties. Here you will see the option to select a staff member or another student in your batch. So let's say you want to talk to Joy, you want to talk to me, or you want to talk to Arun, you can select the name. This will only go as a private email to that particular person. Again, you can attach files and share them via the learning portal, so you don't need to really email us using a private email ID. Finally, we come to reports and gradebook, which is after your quizzes have been done, you will get a score immediately and it will be shown to you in the reports and gradebook category. Right now, everything will be empty for you because you've not attempted, none of the due dates have passed, but as your batch progresses, you will see this list building up and you will get a cumulative score of your performance across this batch over here. So that's about it. Do any of you have any questions? So that's it from me. And thank you for your time. Thanks. Done, right?
Thank you, Zenobia, for introducing us to the LMS and all its features. The next thing that we have is we have our industry expert with us today. I would like to introduce Amit to you. Amit Ratanpal has 15 years of experience in the capital markets, the asset management and investment banking space. He has serviced several deals in the financial services, the manufacturing and the real estate investment areas. Before joining private equity, Amit was the head of ICICI's Fund of Funds business and was involved in establishing the business from its inception. Amit is a fellow of the Institute of Chartered Accountants of India. He holds an executive MBA from the NMIMS University in Mumbai and is a graduate from the General Management Program at the Harvard Business School. I would like to call Amit on board to share a few things about the capital markets arena.
And their mic is on also? Yes. Okay. Hello everybody. Good evening. I hope you are having a great day. Thank you for making yourself available for this special speaker series session. As Joy had mentioned about my background, today I thought that I will focus on what is the purpose of the capital market, what are the overall opportunities that the capital market provide, and why or what is the importance of the capital market. And if there are any specific topics that you want me to cover, I'm very, very happy to cover any additional topics as well. So first, let's understand the importance of the capital market. I think the fact that we are surviving is one of the core of because of the capital market. And I would say so because today for everyday living, we would require money and we have our aspirations as well. And it is this particular capital market, through their various products, help us to achieve our day-to-day living as well as help us to achieve what we would like to have it in the future as well. And let me give you a very, very simple example of that. Today, if we want to buy a home, it is because of the financial services market, the capital markets, why we can buy a home, because there is an organization which provides loan to us, even if we don't have 100% of the money that is required to buy the house. So, how does this institution who gives us loan to us get all this money from? This particular institution receives money from other investors who have surplus money, and this particular institution raises money from this individual investors, or it could be corporates as well, who have surplus money and provides it to this particular institution. And that's where the capital market exists. Obviously, the money can come in the format of equity or debt, which we will cover as we, you go through this particular courses. But what I would like you to just focus on this at this stage is that capital market is a center of everything that's happening in an economy, everything that is happening in and around us as well. In a day-to-day living as well, the capital market does exist. And that's the importance of it. So, I can give you one more example in the importance of capital market. Today, if, for example, we are working in a company, and you can take in a company like Infosys, because everyone knows that Infosys have been given ESOPs to their employees, and employees have definitely made millions of dollars through these ESOPs. Now, if our salary is, say, 100 rupees, and out of that 100 rupees, 80 rupees would come as a normal monthly salary, and that 20 rupees would come in the form of equity shares of the company, because we are sharing the ownership of the growth of the company. Just imagine if the 20 rupees becomes 100, what would happen? Obviously, there is a growth. There is a huge capital gain that we have earned. And why the shares, or why 20 has become 100? It is the functions of the capital markets, because the capital market have recognized that the company which you are working in as on today has a huge potential, delivering a value to their investors and shareholders, and that's why the value of the company on a daily basis should increase. So today, for example, when you get an ESOP at 20 rupees, why it has gone 100? Because if there is an increment in the value of the company on a daily basis, the returns what you are getting is from 20 to 100 for a 2 years, 4 years, or maybe 5 years period. So that's the importance of the capital market. I'll pause, and if you have any questions, please feel free to raise it right now. You can raise it in the chat as well. And if there are no more questions, maybe I'll move into a few more other topics as well. So I'm just sort of pausing for about 15-20 seconds to check with you guys if there are any specific questions which you would like me to address. Fine. As I understand that there are no more questions, I'll move to a topic which is saying that what are the opportunities in the capital market? Well, if you see the participants or the constituents in a particular capital market are as follows. At one end, you have the regulatory bodies, such as in India, our Reserve Bank of India. Then we have SEBI, which is Security Exchange Board of India. On the other end, we have got institutions such as the banks. We have got investment banking firms. We've got merchant bankers. We have got equity brokers. We've got debt brokers. And there are many such constituents. Now, these constitutions which I sort of shared with you right now are like an intermediary to help us to participate in the capital market. And then there are constituents or participants which supports this ecosystem of the capital market, and that constituents are the depository participant services, the custodians, the registrar and transfer agent, and there are many such other institutions as well. And maybe I will sort of give you one simple example of how this particular, each of these participants are interrelated and where the opportunity would lie. Let's take this as an example such that I, as an individual, would like to buy certain shares in the equity market. So what I would do, I would go and approach a broker who will tell me which company I should buy. So really speaking, if you see from a broker perspective, there are two or three opportunities which you like would be there. One is that there would be someone who will educate you in terms of how to buy equity shares, how to sell equity shares, what are the benefits for it, what are the downsides for it, or what are the risks for it. That's something which I'll call the sales team. And the second part to that is the research team, which will share with you which company to buy or which company to sell. And then finally, there are dealers which will tell us or which will basically execute the orders. Now, this is from a job perspective, if I want to just give a clear-cut opportunity if someone goes to a capital market product or a learning, is there any opportunity after learning through this, going through the product, to get a job? Yes, there are an opportunity wherein you can first of all be an investor like me, because if you are not aware of what the capital market is all about, this particular course definitely will educate you on everything about capital markets. The second thing out here would be that you can be part of the sales team because you understand the product. You can even educate many people like myself in terms of what are the opportunities and what are the other benefits you get if you participate in the capital markets. Or you can move even to the broking side, on the dealing side of it, wherein you can help to execute orders. So this is an opportunity from a broking perspective. Now, when a broker places an order in the stock exchange or on the terminal and the order goes to the stock exchange basically executes it and then will give you the equity shares and you will have to give the funds back. Once you have a reasonable knowledge of the capital market, you can also be part of a stock exchange wherein with the basic product domain or as an analyst, you can also work with a broking, with a stock exchange, supporting all the brokers, say for example, or even executing various operations related to the stock exchanges. Then we mentioned that once you transfer the funds, you get the shares. The shares are now held in the depository services. And this particular depository services is very similar to a bank, but they hold the equity shares of the company which you have bought. And there is a job opportunity again out there where you can be as part of the product team or you can be part of the sales team also, because at this stage you have understood the entire ecosystem of how the capital market works. So this is a very typical job opportunity which you will get in a broking firm or the exchanges as well. But if I want to move to a very, very different industry, such as say the IT industry, information technology industry, Infosys develops products and technology which supports the capital market. So for example, the entire order tracking mechanism or the entire mechanism wherein you have bought the shares and this is the amount that you will have to pay. The recording of that in a broking firm is called a back office. And there is a technology piece which is involved in it. So you can work with an IT firm as a product specialist who knows the entire capital markets, its functioning of it, and support the technology team to understand how the technology should be developed and what is the flow of information in the capital market as well. So that could be another opportunity which you may get it as well. Well, we were mainly focusing on the capital market, on the equity side or the broking side, but I can move on to even investment banking side as well, or the fixed income opportunity as well, wherein you are buying or selling bonds, and hence there could be an opportunity to a mutual fund industry as well, wherein you can be part of the product team who develops develops various products that are required by the mutual fund industry, or you can be on the sales side of the mutual fund industry as well. On the other hand, you can also be part of the investment banking firms, specifically the captives. As you would be aware that some of the large global organizations such as HSBC, Goldman, Deutsche, Barclays have outsourced their back office, mid office, and various different operations and IT-related activities to India, to the captive unit. And as you know that these are the large financial services organizations across the world, they need a lot of people who understand the capital market, who understand the operations of the capital market, who understand the functioning of the capital market, so you can even be part of some of the large global organizations working out of India in their captive units as well. So from an opportunity perspective, I believe that the opportunity is very, very vast, very, very large, and you can choose depending on where you want to go, which part of the capital market or the investment banking market, whether you want to be on the front end of the market, whether you want to be on the back end of the market, on the back office, middle office. I'm saying you can decide. But I think in a nutshell, the opportunity definitely is very, very huge. And more important is that every country has a capital market because the country survives on the basis of capital market. If there are surplus funds, as I mentioned to you earlier, you would like to invest. And if you have deficits, then you don't mind borrowing. And just because of maintaining this demand and supply, the fundamentally the capital market exists. And that's the opportunity we are talking about. So this is something which has been in the entire world for hundreds of years. It is surviving today, and it is definitely going to survive today as we see and go through the future as well. So these are the, what I spoke about now was on the opportunities in the capital market. Again, I'll pause for a while and understand if you guys have any specific questions that I need to address, and happy to answer them. So again, I'll pause for about a few seconds. So I'm again assuming, that there are no as such specific questions on the topics which I covered. Lastly, oh yes, there is a question. So what are the opportunities in operation department in capital market is a question been raised by one of the participants here. In the capital market, in terms of operations, if I want to go into very, very specific, it can start with as basic as account opening. That means if I would like to start being an active member or an active investor in the capital market, you have to open an account because that's a regulatory requirement. So as simple as that account opening, recording of their data, conducting certain basic due diligence such as know your client, anti-money laundering to everything starts from there. Then can move into, say for example, settlement of trade. So as I mentioned to you that I bought certain shares. That means the shares will only come to me if I have given or transferred the funds to the particular broker through whom I bought this particular share. Now, has anyone received this particular shares or the money and other things? That's where the entire settlement takes place. So actually going ahead and calling up the investor saying that, hey, I have not received the shares. Hey, you bought this particular share, this is the total amount of funds that you need to pay. And confirming to the client. So that could be one part of it in the capital market. The third part could be even the risk management part of it or the gross exposure monitoring of it. Say for example, if you are allowed to buy certain quantity of shares, you will generally not allow anyone to buy a share by saying that, hey, I call up the broker and say, please buy shares worth 1 crore for me. We will only allow to buy the shares to the extent of value based on the net worth of a particular investor. And let's assume that his net worth is say 2 crores. You maybe allow him to buy shares worth 50 lakhs because you want to be very, very sure that you receive funds from the investor once he bought the shares. So in that case, someone has to even conduct a risk management, whether this particular person is eligible to buy shares worth 1 crore or 20 lakhs or 50 lakhs as well. So there are very, very different opportunities in different parts of the capital market, but I just shared with you a few sample opportunities in operations part of the capital market. If you are working on the back end of a mutual fund or the asset management company, then the opportunity could be of fund accounting, the opportunity could be doing valuation, the opportunity could be in terms of settlement of or buying or selling of shares or the asset management company. So there are various different types of opportunities that would exist as you move into different parts of the capital market. And it will also depend on which participants or which constituent you are working with. Are you working with a broker? Are you working with a bank? Are you working with an investment banker? Are you working with a stock exchange for that matter as well? So I hope I've been able to reply to your question. And again, I will pause and wait for any specific questions that you guys have. Yeah. Mutual fund is part of the capital market is a question which we received. Yes, mutual fund is a part of the capital market. And let me step back and give an explanation why mutual fund is a part of the capital market. Today, if you have got, let's say, 100 rupees or $100 which you would like to invest, and probably that amount may be too small to buy a particular equity share, or maybe you don't know which equity shares that you should buy or when to sell. Then the mutual fund plays a very, very important role. What do you mean by mutual? It's everyone together and there is a fund. So all investors, different types of investors, including myself, who don't have time or don't have, specific strength to evaluate each and every stock or the shares in which I should buy, or at what time I should buy, or when I should sell. In that particular case, it is better to give the funds to someone who is an expert. The mutual fund or the asset managers or the asset management company are an expert. What they do is they raise funds or they pool the capital from various investors across India, across the world, put it in the fund format, and they start investing on behalf of the investor. Because if you see, if there are 100 investors, each investor investing about $100, then the pool is large. And then they can spend time to doing a research on a particular company and due diligence as well, and accordingly go ahead and invest in that particular company on the behalf of the investors. And yes, they're not going to do this free of cost. They're definitely going to charge something. And it varies from 1% of fees to as high as 10 to 3% of fees as well. So answering this particular question, is mutual fund a part of capital market? Yes, it's definitely part of the capital market. So, does anyone else has any other questions? So, I think this particular session was interesting, and I hope you guys got a good overview of the capital market, the opportunities and the importance of the capital market. And if there are any more questions, please feel free to send your questions and queries to Imarticus administration team, and definitely they will ensure that your questions are answered. Thank you very much and have a great weekend. Bye-bye.
Thank you, Amit. That was indeed extremely enlightening. So students, now this brings us to the end of this webinar. We'll have another webinar the next week at 4 p.m. on Saturday. And just in the interim, we will be uploading the videos onto the LMS, and we've already received the demo of the LMS via our just colleague Zenobia. And we'll get back to you very soon with respect to when these videos will be live on the LMS. Thank you for joining us once again, and have a good day.